Great to see you, Carl.
So you've been talking and keeping your eyes peeled the last couple of weeks for any sign that COVID infections are beginning to peak. You're pointing to some other models this morning, but it's tentative, and you even point out sometimes on these charts you got to squint to see it. How can you describe your level of confidence in this call?
It's actually growing, Carl. One of the things that really helps us understand if COVID is peaking is looking at the 7-day rate of change. So our cases increasing over 7 days ago. And our data science team led by Tireless Ken looked at almost 22 counties in Florida. And I think every county except for one was seeing a slowdown in that 7-day delta. So even Florida looks like we're going to have a peak in cases pretty soon, probably within the next few days. And then, of course, as you know, a lot of the forecasters, but the one I think is most important, IHME, is forecasting the U.S. might peak sometime this week. And I was encouraged by Dr. Gottlieb's comments this morning that, you know, there isn't likely to be a fall wave. And I think that's another important takeaway, that this is the wave, this is the biggest wave that we could see in the year. And if it peaks, we're going to have an everything rally, a big one.
Yeah. Well, and you point out, especially in Florida, where you're essentially looking at zero mitigation, to have the wave roll over would be impressive. You've also looked at the average waves of recent months in countries like India and the UK. You've centered in on a period of about 45 to 50 days, at which point these things tend to peak. Do you think the market can start to digest that as a baseline for any future waves?
In our client conversations, Carl, that's not their central thinking. I think clients are so nervous about the Delta variant that they're only going to believe it when they see it. But you're spot on. Florida is about, 40-ish days into its surge, and the UK peaked after 45 days. India was coincidentally around 45 days. And so it's possible that the US will follow that pattern, and it would be very curious, but it would be very encouraging and, again, a positive surprise for markets.
Hey, Tom, you mentioned the possibility of an everything rally. I wonder how you square what we saw from big tech earnings just a couple of weeks ago, aside from Alphabet, which did quite well. But we had a number of beats on the top and bottom line, relatively strong guides, but those stocks didn't rally, which made me wonder whether they've given much of what they can give for the year.
Oh, that's a great question. I mean, Q2 earnings are a little confusing because we know that delivered results are strong, but I think investors are still having the same COVID and macro overlay that, well, there's uncertainty about the global reopening and the spread of the virus and the safety of the vaccines and the efficacy and the vaccine resistance. So there's so many things that are overhanging the outlook that I think investors would have been selling the news on Q2. But I think if COVID is retreating in the US and we don't have a fall wave, we're going to have a really big risk rally. And again, I think even today's Bitcoin rally is really strong evidence of this everything rally.
Yeah, speaking of that Bitcoin rally, I wonder, are you still holding your $100,000 target for Bitcoin by the end of the year? What do you attribute the recent rally to, and what gets it there?
Well, I think it's a great question, and I might even make an inductive observation that, there's been a huge regulatory and legislative assault on Bitcoin and digital assets from both China and the US. And yet Bitcoin has managed to not only break out of that 30 to 40,000 range, but today it actually is hopefully going to close above its 200-day moving average. That's a really big risk on signal. That actually kicks in rule number 3 for our crypto, which is you always buy Bitcoin when it breaks above its 200-day moving average. The average 6-month gain is almost 180%. So I think 100,000 into year end is actually pretty reasonable.
Interesting, Tom, to hear you double down on that. You've been a great source of high frequency data and insight, which is really valuable to a lot of your subscribers and viewers. Good to see you. Thank you.
Tom, great to see you.